Hi all, I'm Sham. I have Kishan with me.
Hi, Sham.
Welcome to Free Float. And this week we'll be discussing the bizarre run up in the markets. As you are all well aware, India is going through a very tragic second wave of COVID. Uh, it's really bad out there. Record number of infections, um, and there's a shortage of pretty much everything. It's really bad in the on the street in the real world. But what most people could not wrap their head around was the fact that the markets, especially the Nifty index, kept going up. And frankly, I was completely surprised by the trend, but thankfully, because we've automated everything and most of it is algo driven, stayed away from doing any ad hoc stuff, but that doesn't take away the fact that what happened in the market. So is completely counterintuitive. So today we'll be discussing what some of the factors driving it could be. This is not to say that sentiment cannot suddenly turn come Monday and everything goes to hell, but this is our attempt at clarifying and trying to sort of figure out why the markets have been doing what they have been doing. So Kishan, do you want to start us off?
Yeah. So, Sham, hi. As you mentioned, right? I think for most market participants, it's been a very confusing time because uh, you have, absolute. Tragic and tragedy and like despair around us. And it's not just one is a human aspect of it, like individual families, but you also have, the economy, uh, being disrupted, right? Where people staying home, and then basically, um, it will take a few months at least for you to get back to the kind of normal that you were maybe in like January or February, from an economic perspective, at least. And the markets have uh, completely shrugged it away, and they seem to be in a different world altogether, and so like this week, what you're trying to do is trying to see what the market is looking at from a rational perspective. The markets can be irrational, and someone could make a case that this is just a key few players trying to hold up the market, but the fact is that while the markets can be irrational, or like some stocks can be irrational, but the overall market um, works on a lot on sentiment, right? And
Yeah.
if the
So,
sentiment,
so you mentioned something, right? So this whole conspiracy theory that a key number of small set of players are holding the markets up. I can't believe, it's like every time something like, if the markets go up or if the markets come down, both, and it is
yeah,
not specific to India, both in the US and everywhere actually. The conspiracy theory is always about a small set of players who are trying to do something with the market. But I think most investors would be better served if they just don't believe in any of this conspiracy stuff. The market
yeah,
is much bigger, much bigger now than what a small set of players can do, even if they are billionaires.
yeah,
So that being said, sorry Kishan for interrupting, but
yeah.
yeah.
Yeah, I know. You can talk about a few stock, like some stock which has some some 2,000 crore market cap, that being like manipulated by a few operators,
Yeah.
that I can believe. But like the entire index, which is a much bigger than anyone else, like even bigger than say the biggest company in India trying to manipulate it, it's beyond their realm.
Yeah.
So yeah, so no, I mean, so I think that um, while markets can be irrational and stuff, sentiment plays a large part, right? And if the sentiment around you is pretty bleak, then you would expect that to be reflected in like asset prices, especially because it's not that India is trading at a cheap like valuation. You're trading at your highest like 40 times earnings, around that much, and like the projection for next year is like 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 stupendous growth, like 25-30% kind of growth in earnings and stuff. So I mean, and you haven't seen any, like you have seen some downgrades come from some brokerage and stuff, but you haven't really seen that the kind of EPS jump that people are looking for, like like scaling that back, because for sure you'll have disruption at least for 1 or 2 quarters, and so you
Yeah,
haven't seen like
and I feel like
market in
what,
panic.
yeah, I think what investors miss is that Indian indices, the composition of Indian indices and emerging market indices in general uh, has almost zero resemblance with the composition of the S&P 500, right? So S&P 500 is all scaled tech course, right? So by scale tech, I mean they're not services; they're all product companies where you have like say 100 developers, creating products for billions of users. So they are all scaled tech companies that dominate the index. Whereas in most emerging markets, it's mostly commodities and services, businesses, and banking. So it's not correct to compare, EM and other, most of the European indices as well with the performance of US indices. And, and when you add this whole COVID lockdown to it, right? So you need to further split it and say, even within services, how many of them require in-person services versus stuff that can be done remotely. So for example, Infosys, even though it is a services company, they can operate in the remote model for at least a couple of years before they have problems with culture and so on. Whereas there are some services companies, theaters and car maintenance or dealerships, for example, that require in-person meetings and so on to make things happen. So the minute you split it, you'll realize why Indian indices at least have held up. So Kishan, go ahead.
Yeah, I mean, yeah. So what is the composition index, right? I mean, like you just mentioned, TCS, Infosys, Wipro, HCL Tech would be, maybe a quarter of the index,
Yeah.
and that's a significant chunk. And then you have Reliance, which is which is primarily driven by its oil and gas business, plus plus its telecom, which are both not so dependent on the domestic, or it's not dependent on uh, I mean, telecom is not affected by the lockdowns, and in fact, it benefits from it. And I mean, oil and gas, oil is back to 67 or so, and so Reliance, the refining margins would be also pretty solid. So that's not affected, and then you have. Some of the steel companies, and and the commodity companies, which are doing well, in terms of, because steel is at its all-time high. The global demand for it's pretty high, and with the infrastructure bill in the US, and also China, and most economies trying to rev up the economies, commodities are going through what people think might be a super cycle, but whether it's not, the fact is that it is on the upward trend. And then your pharma, which is which people You know, you know, I mean,
Yeah.
yeah, I mean, like, so they might be not be big part of the indexes, but they have a, you know, reasonably good composition. So the only companies in the index which have a major chunk which are really affected are, you know, your, I mean, your financials and maybe and your autos. You know, the rest of them, you know, whether it's pharma or like FMCG and stuff, they're probably held up. So one is trying to see just in terms of index, you know, and the second part is fund flows. I think last year you had a huge inflow of foreign flows that came into India, right? And while in April there have been some withdrawals, it's not enough of a reversal for you to have a, you know, for the trend to change significantly. I think, you know, that's an important.
I don't know about that because the problem with looking at fund flows for explaining market behavior is that you should always be looking at the incremental dollar impact of the incremental dollar, right? Not what has already come in. So the fact that I don't know, some $5 billion came in over the last 6 months, it's a done deal. So that pushed the market up, and so that's it. But
Yeah.
if you want the market to go up further, then you need more dollars coming in.
Right.
And this is where I think there's a big question mark. So you have your financials taking a hit because a lot of the loans are going to turn sour. So now they've gone to the RBI and trying to figure out if they can have a sort of like a redo of what they did during the first wave. And so financials are a big question mark, and fund flows. I hope the participants are much more rational than being swayed by what they're looking at, the images on TV. Because at the end of the day, you have to look at changes in sentiment and not just the current level of sentiment. So I would say that the prevailing mood in the is bad, but can it get worse, right? So I don't think uh, sentiment per se can get worse from here. So we've already seen Maharashtra CM come in and say he's not in favor of of making the lockdown stricter. Goa's CM has already come in and said he's not going to extend the lockdown as long as people sort of do COVID appropriate behavior. Yediyurappa has come in. Karnataka CM has come in and said that the lockdown is working, and case loads have come down. So like this, as the current stream of bad news uh, doesn't get worse and actually gets a little better, incrementally better, the sentiment should improve. And so changes in sentiment should drive additional incremental flows as well. I mean, that's my 2 cents.
Yeah, I mean, yes. So you're right about, like fund flows being impacted by, by the incremental thing. But for you to have, like a down move, like a similar down move to the up move, you need, you need a huge rush of selling.
Yeah.
Because I mean, for you to really have the market, go in one direction, and for that to happen, you need somebody I mean, a few large players to to really start unwinding the position. And like we covered, like carry trade, like a few weeks ago, and that's one of the like events that could lead to a huge outflow of money that will send the market into spin. And then you also said that if you see what happened in UK, right? In UK, at least on like official per capita like numbers, UK had a much more deadlier second wave than India. I mean, UK for being India's like 20 times the size of UK in terms of its population, and UK was like reported 7,000 cases and stuff, and they went to a very 2-3 month of extremely strict lockdowns, and but the market did not did not go into a tizzy like it did in maybe in March, because I think the market understands now that this is maybe a 2 or 3 month thing. It's not going to be like a one fixture, and the damage to to the economy and stuff will be much more limited than what you first like imagine it to be. And I think markets have seen the UK example where today with like 30% of its population fully vaccinated and like 50% getting one dose at least, the cases have come down to very like a low number, about like 2,000 like cases a day with like 0.2% like positivity rate. So basically UK has crushed the virus, and they like on the verge of being getting back to complete normalcy. So the market sees that by September, October, the market expects that things would get back into control. Like there'll be short-term chaos, but the way the market sees this is like the way we see a natural disaster. It would not change the long-term like the trajectory of things, because as long as it's not a very like a super earthquake which will change everything, that they think that the human tragedy is one thing, but like the long-term effects of this, the market might sees it that in 6 months or in things will be much more different, because India would have even at the current pace, it would have at least vaccinated like 50% of its like population getting a dose, and maybe like at least get to today's UK level, which would be a significant achievement for the country. So and for the economy to get back to some strength. So I think that is what the market is looking at. It's looking at it from a this being like a 6-month like hardship that that we'll have to endure, but I think we'll get back normal. So that being said, I still think the market should have been more rational and discounted at least last year's earnings. And it might have, but the point here is that you do see markets holding up, in the sense that you do see not nowhere close to panic, or like nowhere close to still you see that optimism being there, which is which is kind of odd.
Right. I mean, Indian investors are nothing but optimistic, right? You'll never meet a pessimistic Indian investor. There's always we are all bulls here. I find that kind of hard to believe, because if you look at historically, what the EPS estimates were, for say the Nifty 50 index in the aggregate, right? So you poll all the analysts and you create a aggregate picture of what the EPS estimates were and what actually was delivered, right? It's like the difference between the sun and the moon, like over the last 5 years. So estimates have been consistently bizarrely high, and reality has always been disappointing, but that hasn't stopped the bull run ever since Modi sort of came into the picture, and hope springs eternal, so to speak. And I think, at the risk of going off topic, this has a lot to do with the fact that the government and the regulatory setup, the institutional setup, works to trap capital within India. So it's very difficult to take capital out of India, especially for Indians, right? So anybody who has tried to do LRS can attest to this fact. It's a hugely cumbersome paperwork driven thing, and the banks take a huge chunk of what you're trying to transfer. Most people point to the transfer fee, transaction cost, and and the GST and stuff. But the hidden cost in forex is always the bid offer spread, which is often like 3% wide, 3%. So whatever you transfer, after all the fees and everything, it's already down by three and a half.
3%.
Yeah, 3.5, 3%. So after you transfer and you invest, so first of all, anything north of I think what is that, 7 lakhs?
Yeah.
You have to pay tax deduction at source. I mean, you can claim it back when you file for taxes, but it's still 5% that is deducted, on which you're not going to earn any interest. And then after you transfer and then you buy some foreign stocks, the amount of tax issues you're going to face, no, I wouldn't say issues, but filing taxes on foreign investment it's a royal pain, because it assumes that your chartered accountant knows what he's doing. There are some 2 or 3 forms that he needs to fill, and he needs to figure out what kind of deductions that needs to be taken, and all that costs you. So unless you're a big player, and you're transferring like 100K dollars, $100,000 or north of it, or out of India every year, uh, it is a royal pain in the ass. So what happens to all the retail savings in India is that it gets trapped within India, and there's this whole story generating cycle or circle, where that just keeps driving the same story again and again. India is growing, so a big middle class, blah blah blah. So that savings gets channeled into all these sort of story nonsense, and it keeps
Yeah.
driving all your mid caps higher.
Yeah.
So
I have
somebody asked me, why isn't the mid cap, at least the mid caps, correcting? Because mid caps are
yeah,
heavily in-person
depend on
economy, right? But it's not correcting because there's a lot of retail money that just goes into these story mid cap stocks, believing in the India story. So this
yeah.
is part of the reason why you're not seeing a huge correction, because there's excess savings in the economy, by people, especially who have tech jobs, and jobs basically that have not been affected by this COVID, have actually seen their savings go up, because there are very few avenues to spend it. Like, you can't go out for dinner, you can't go out for movies, you're trapped at home. There are no vacations, you can't travel. So what do you do with that money, right? So and there's no commute time, so you have like 3 hours extra with you every day, and
And you can't gamble, and you can't gamble in India. So
yeah. So this is pretty much the only thing. So all the savings, first of all, there is excess savings, and second of all, it's trapped within India. It finds a home in these mid-cap stocks. So you also have that factor sort of driving the markets, because even though FII selling, or kind of FII flows went negative last month, it still has not been enough to sort of fray this domestic buying into equities.
yeah. When you mentioned that, the story of Indian middle class and stuff, I remember reading this. Someone commented. The one slide where like everyone talks about India's strategy is that India has a billion people. Nothing has lost more money for people except no one has lost more money by showing that slide, because that slide gets everyone excited, but then the reality is far more different. That India is the next China, or India
Yeah.
is India. Yeah, like
Dude, I
that's
think
that.
yeah, it's like India is the next India, man. There's no peer
I know.
comparison possible, right? We are kind of like United States of Europe, right? So it's not going to change anytime soon. We're always going to be, we have everything from staunchly communist Kerala to to Gujarat and everything in between. So you just can't say, oh, we'll be the next China. And the thing is, we don't, we shouldn't be the next China. How about that, right? I never want to be in a place where we are the next China. I freaking hate China at this point, right? So we definitely don't want to be the next China. And when it comes to investing as well, this is something that people should keep in mind, that uh, there is no solutions to projected problems in India. Okay,
Yep.
so people will not spend money on problems that somebody has foreseen and projected. They will spend money on problems that are already there. So you have to first show the problem, and then you will get money for it. So any of these, things, projects that look at solving a future problem, almost never ever gains traction. So what that means is, by the time that project is finished, after getting all that environment clearance and this clearance and that clearance, and after it is finally finished, the demand would have far outstripped the capacity that has been brought online. And so that has always been the case in India. So if you believe that this is going to solve a problem 50 years down the line, no, it's not. Nobody's going to spend money on it. You take anything, right, from your metro project to to industrial SCZs, to to sort of privatizing government-owned enterprises and so on. They solve the current problem. So until the problem is blowing up on your face, there is nobody's going to spend money on solving it. So
Yeah.
yeah,
because you have lack of resources, and then you have lack of foresight and planning and stuff. So you're always trying to put out fires.
it's politically not possible, man. Look at bullet train, announced with great fanfare by the great Modi ji. So so now everybody is trying to trying to find a big enough carpet to bury it under, because there is no progress. There is nothing. And even though Japan said they will give us 0% financing, not going to happen for the next 30 years. Why? Because it is a solution to a projected problem. That problem might happen 50 years down the line, that you might need a high-speed link between Gujarat and Maharashtra. So it'll, by the time that the bullet train comes, that problem will be blowing up on somebody's face. Okay. So that's when it'll get built. Until then, no, it'll go through hell, through the courts, through the ministries, through whatnot. So
I'm the land acquisition.
yeah, so forget it. So and and also politicians need to win elections, right? And elections occur every 5 years. So so the guy who sanctions it and puts his sort of reputation on the line is not going to be there when it gets completed. So every support is kind of lukewarm. So every politician has a finger up in the air. So which way the wind is blowing, right? And if it is blowing against him, he's going to ditch it.
Right.
So I mean that's the reality, right? Because I read a slideshow of some foreign fund, some FII managing a few $100 million, saying touting this DMIC. Do you know what that is? DMIC?
Yeah. I mean, Delhi Mumbai Industrial Corridor.
Yeah, Delhi Mumbai Industrial Corridor. When was it announced?
2007 or something.
and nothing is being done at this point. So my point is, there has to be a certain amount of realism. Projects get announced and all that is great because it gets politicians the press that they need. They need to be always in the news. But be assured that unless the problem is actually blowing up on your face, it's not going to get solved in India. So with that, I think we should wrap up this week's free float. Kishan, anything else to add from your end?
No.
All right.
No.
So that's it from us. Stay real, stay safe, wear a mask, and don't go out of your house and invest in stonks. Adios.
See you.